Now, I think gold still can run to about 2650, maybe all the way up to 2750. And if it does, there's probably going to be even bigger premiums because it is going to be like headline news. I mean, I think gold's ready to pop and have a very nice run of 8 to 10% from where we are right now. And that I think is going to suck the masses in.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Chris Vermeulen from thetechnicaltraders.com. Chris, thank you so much for joining us today.
Hey, thanks for having me, Elijah. Always a pleasure.
Well, it's great to have you today. I did want to discuss the markets, obviously what we're seeing happen. You've said that the bond market has technically is now in an uptrend here. So it seems like interest rates may have topped out. What do you think the significance of that is going forward here?
Yeah, I think just this in the past week, TLT, the long-term Treasury bond ETF, finally has turned a corner. It's gone from a multi-year bear market, selling off over 40%, to it looking like it has carved out a bottom. And now from a technical standpoint, so from price, momentum, sentiment, it has now turned up and it's built a base and it's starting to move higher. So this is a really big thing because this is a lot of portfolios carry bonds. A huge portion of them. And finally, we're going to start to see them go up. And typically, the stock market will precede recessions in the market, in the economy, and bond pricing will also usually tell us what the Fed is going to do. So the fact that bonds have now finally turned into an uptrend tells us that I think interest rates are probably finished going up and that they're probably going to start doing some cuts. So this is very good for a lot of portfolios in a way because bond prices should now start to rise. But the problem here is, if we get into a bear market phase with stocks and we get into a tough economy, they're going to cut rates as stock markets fall, which will send bonds higher. But, it's tough because stocks will fall, which is generally a bigger portion of people's portfolio. But it's nice to have bonds back in the game. I think there's quite a bit of upside potential in the bond market. And it's really just exciting to see this asset class finally come back to life.
It seems definitely exciting there. And I know a lot of people are expecting rate cuts going into the end of the year, and this could mean big things for precious metals. So how do you anticipate precious metals reacting to all of this?
Yeah, generally we see precious metals do very well after a major bull market phase, which we have had. We've had a tremendous bull market in equities, but now we're starting to see signs that precious metals, gold is hitting new all-time highs this week. And we're seeing we're starting to see the stock market start to struggle a little bit more. We had a massive wave of selling in the Magnificent Seven a couple of weeks ago. We saw the volatility index spike 176% the morning that the market gapped sharply lower. Really, everyone ejected out of their plays. We haven't seen volatility and that much fear since the COVID crash and the 2008 financial crisis. So right now, we have been seeing the Magnificent Seven kind of drift higher, but it doesn't have a lot of power behind it. I think people now are really gun shy. They all got spooked. And now people are debating, hey, is the big tech kind of AI move done for now, or is it going to get some legs? And that's where the market is trying to figure out does it have a little bit more upside, which I think the stock market in general does. The Magnificent Seven might actually hold things fairly neutral, though, because they're a huge chunk of the index. And I think a lot of people have got hit pretty hard and they're nervous to get back in. So I think as a whole, the majority of stocks are going to grind their way higher, a few percentage points maybe over the next couple of weeks. But overall, it's really going to come down to if people start moving into the big techs again, or if they're too scared now.
I know we've been tracking this for, I think, over a year now of, this topping in the stock market. When is it going to roll over and when could we potentially see a crash here? It sounds like what you're saying is we just have maybe a few more months to go where we grind higher, and then is the next phase where we have a significant downturn? Your take?
That's what it looks like. I mean, when we look at the weekly chart of the SP 500 and we look at the weekly technicals, and momentum and sentiment of where money is flowing among all the different asset classes, when we step way back and look at the big picture, we actually have the stock market set up at the same type of scenario that we saw back just before the 2022 bear market started. So we are like right there on the cusp where the underlying technicals from a big picture standpoint have broken down and price is still holding up, but pretty much everything under the hood, kind of hidden away that most people don't see about the financial system or the stock market, has completely broken down and crumbled. So now it's just a matter of, I think we just need a few more weeks potentially. The market might grind a bit higher, but overall, I do think we are very close to a major market correction, and it's going to catch a lot of people off guard, I think.
And what are the best ways to prepare for this and keep informed, do you think, when it comes to a stock market crash? Because this kind of thing you obviously can look at the fundamentals, but as you mentioned, it'll catch a lot of people off guard, and it's not necessarily 100% predictable. So how can people hedge against this collapse?
Yeah, I mean, I think over the next couple of months, or at least the next month or so, I think precious metals, I like physical gold more than silver or miners. I think gold has got more upside. It's very stable, very slow. But if we do go into a big market correction, you really do need to have a strategy. It really is that simple. You need a way to identify when an overall major trend has turned a corner, when it starts to go down, and you have to have position and risk management in place saying, okay, well, hey, if the bull market is coming to an end, I need to get out of them because they're about to drop. And so most people don't have a strategy. They just kind of like, hold on for their dear life and just hope and pray it's not too bad. But you need a strategy. I use technical analysis, which allows us to follow price, money flows, sentiment, cycles, all kinds of different ways to analyze the market. And so that tells us when the market has lost its momentum, has finally actually turned a corner. And once it does that, then we move to a different asset class. And bonds, which is why I think it's exciting, are finally favorable where we could actually maybe be able to move back into bonds for once. We haven't been able to be trading bonds for a couple of years since they've been going down, but they might actually become a very good play. So that could be one of the ways to play this, is to actually get 100% out of stocks and eventually get into bonds once the stock market does roll over.
And when it comes to precious metals, I mean, obviously they can take a hit, as you mentioned, during that initial crisis. We were talking before the interview, the difference between the physical metal prices and the spot prices. And it's interesting, when we do see a downturn, often premiums will rise. And I know recently we've been seeing a bit of an uptick in demand, slight increases in premiums. So it might be kind of the calm before the storm here, but your take on the physical price of the retail product versus a spot price and where that might be headed in the future.
Yeah, I think when gold starts making new all-time highs, I think it starts to pull more people to the commodity. And so then it becomes kind of retail investors are calling everybody to try and buy some physical metal. And generally they can squeeze the premiums higher because now there's demand for it. So I think we could see, premiums continue to rise. When premiums rise, it means there's a lot of demand. And usually when there's a bunch of demand, usually that move is getting close to being done. Now, I think gold still can run to about 2650, maybe all the way up to 2750. And if it does, there's probably going to be even bigger premiums because it is going to be like headline news. I mean, I think gold's ready to pop and have a very nice run of 8 to 10% from where we are right now. And that, I think, is going to suck the masses in. And on multiple timeframes, the daily chart and the monthly chart timeframe for gold, when we project forward using Fibonacci extension, which is a momentum technical indicator, it goes to about 2,700. And so when gold hits that level, the media will be all over it. The average investor will just be starting to buy it because now it's marketed on every news station as like the best asset to be in. And really, that'll probably be the top because that is all the price action leading up to here, going back many years, are actually saying 2,700 is where gold should stall out and then start a pullback, which maybe that's when the rest of the economy and the stock market start to pull back as well. So there's upside potential in gold. It is a lot more stable than pretty much everything else. But I think it will pull back, as you mentioned, with the market eventually. And eventually it'll fall out of favor and premiums will drop and it'll be a great opportunity because nobody will want it. And the next pullback in gold, I think, is going to be a phenomenal opportunity for like a 5, 6 year run. It's going to be the next big wave up in a super cycle that we haven't seen really since early 2009 when gold just skyrocketed for several years to the upside. That's what gold is setting up for. Over probably next year, I would hope that it starts.
Now, the effect of interest rate cuts, it seems like, would be you would see higher inflation and maybe easing monetary policy, so you'd have a better economy. But it sounds like we might actually see this stock market crash amid these cuts. So, what is your perspective on that? And if we look historically, I believe it's not necessarily true that interest rates cuts are even good for the stock market. So, how do you see that playing out going forward?
Yeah, I mean, the way I see it is typically, I mean, I really just follow the stock market, stocks and bonds and precious metals. But what I find is when the stock market goes down, the Fed tends to cut rates when there's a lot of pain in the stock market. And I think a big part of that has to do with businesses are struggling and they need lower rates on all their, because a lot of companies have tons of debt. And so they need to get those rates down and that'll save the company a lot of money, lots of companies money. And also, when they lower interest rates, that means you're not going to make much holding a bond anymore. And you're like, well, if interest rates go down, then you're more incentivized to be like, well, maybe I'll take a bit more risk and move into stocks or something else that has more upside potential. So the way I see it is there's got to be pain in the stock market. And if they start cutting rates, I believe every time they cut rates, we usually see the stock market jump. That's what I've always seen in the past because people are like, oh, not going to make as much as bonds. Let's move over to stocks. That's just the way I see it. But it's always a short-lived bounce in stocks. It's nothing more than a news-driven event. People pile in for the stock market. It could be one day, it could be last a week or two, but it always fizzles out and the stock market keeps going down. And then the Fed does another quarter basis or 2 quarter basis. They keep firing off these bullets to try to help companies, which if they help the companies, then the share price should do better and investors move in for another bounce. It's just this cycle that repeats over and over again. So that's how I see kind of interest rates.
I mean, it definitely should be an interesting time ahead. I mean, especially as we see maybe a crash in the stock market that we haven't seen in quite a while. So it sounds like there's going to be a lot of movement by government, you believe, and the Federal Reserve to kind of tamp down on or save the stock market in some sense. But do you think that will be effective, or is this just a cycle that is going to have to play out?
I believe the stock market will eventually have its own big correction. Like they can only kick the can down the road so long. There's always some event that, the tech bubble, the financial crisis in 2008, COVID was more of I kind of consider more of like a news-driven event. It was such a short-lived movement. But I do believe eventually there's enough momentum stalling out, which I can feel, I can sense that the economy is slowly grinding to a halt. And then eventually the stock market just starts to fall. No matter what the Fed does, they might slow it down temporarily, but I think the downward slide starts and it just keeps going until there is a big reset. And then once the reset is done, we'll pick a name of what caused it, who they'll call it the AI bubble or whatever they're going to call it. And then it'll be named after that. But the key is just to understand that once it does turn, which I believe is starting to happen, the Fed will only slow it down temporarily here and there, but it'll keep going.
And then your outlook for the next couple months in gold versus silver. Gold, it sounds like probably 2,700. Now silver here, do you see it to outperform gold in the coming months?
It could. I mean, percentage wise, yes. Silver is a lot more volatile. I think silver could run to about $34 or $36. So it's got some pretty good percentage upside from here. It's super volatile. It doesn't always move better than gold in a situation that we're kind of in right now, but generally it wants to go up and to the right, so higher. So I like them both. I don't like miners as much simply because they're part of the stock market. And if the stock market does start to pull back, the miners might pull back a little bit with them because they're stuck in it. But we're in a sweet spot right now where gold, silver, and miners, historically, in this type of scenario that only happens, once every 10 or 15 years, typically all three of those assets around precious metals will move up higher for a certain period of time. And so I think they're in favor for another month or so.
Before we let you go, Chris, I know people can find you on thetechnicaltraders.com. Did you want to share a bit about that and any last thoughts you had?
Sure. Yeah. If people are interested in learning about kind of the daily gyrations in the market and the short and long-term picture of multiple asset classes, thetechnicaltraders.com. I do a morning video every day, recap the charts, walk through everything, talk about positions that we have, all that stuff. Pretty much every trade that goes on are things that I trade with my own money. So you're really just riding my coattails, and I'm riding the coattails of the stock market. And you learn a lot of technical analysis, meet a lot of good people. There's a community to communicate with other traders. So that's a great way to do it, or my YouTube channel at The Technical Traders on YouTube.
Fantastic. Chris, once again, thank you so much for your time today, and God bless.
Thanks, Elijah. Take care.
This is Kaiser Johnson, and these are the Miles Franklin Weekly Specials for August 19th through August 26th, 2024, while supplies last. First, we feature the famous 1-ounce gold Krugerrand at just $60 over spot. Next, we have the favorite bullion coin of Europe, backdated Silver Philharmonics at just $3.10 over spot. And finally, we have 1-ounce platinum Canadian maples at only $80 over spot, one of the lowest premiums on platinum we've seen in a long time. To order our specials or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.